to the Trading Market Technicals Morning Call video for Monday, August the 19th. Hope everybody enjoyed their weekend. On Friday, we did get a little bit of a red day follow through. Dow Jones down 30, Nasdaq down 3 and 3/4, S&P down 5, Russell down 3 as well. And we get a little bit of selling coming in around 12 o'clock, and then markets kind of bounced into the close, a little bit of a short cover rally. But I got a lot of charts here which I want to show you, as well as some indicators which tell me that we have some further weakness to come. Now, markets just don't go straight down and or straight up. So I do see a little bit of a bounce here in the next couple of days. But I want to show you here, let's start with the NYMO, the McClellan Oscillator. Now, we are down into this area here is negative 80, which we are oversold. Okay, now the indicator is reading oversold, so that's why I'm thinking even if we push lower today, at one point I think we're going to bounce here. And if we do bounce in the market, the S&P equities, I think that we look for up in these areas for possible short again. I don't think the markets are going to get right back up into the upper end of the range, at least not yet. But that's something to keep an eye on. Looking for a little bit of a bounce here, some strength for a couple of days, and then the markets look to roll over again going into the end of the week and maybe even the following week. Now, we have FOMC, so that could actually change anything. Okay, remember, this is market analysis. You have to trade it according to your trading plan. Okay, so here's the NYMO. Now, let's take a look at the NASI Weekly, the New York NASDAQ Summation Index, and I mentioned that this actually went on a sell signal. This last week triggered the sell signal. We did get it the following week, but we needed the black line to turn red. This did it. So now we are actually officially on a sell signal in the NASI. The New York Stock Exchange Summation Index, same thing. We are on a sell signal. As you can see here, S&P at these all-time highs. These are weekly now, okay? Remember that, weekly. So this is also on a sell signal. S&P above the 50-day moving average. And theory has it, right, that if the stocks we're at these elevated levels, and stocks above the 50-day moving average are starting to break lower, as you can see here, well, that's telling us that, you know what, it's not going to be sustainable. The price is not going to be able to keep continuing higher, so markets will have to start to sell off as well. If you take a look at the stocks above the 200-day, same thing. So this doesn't bode well for equities as far as continued strength. As you can see, this index is, this indicator as well is on a sell signal. So we have the S&P stocks above the 50 and the 200-day moving average on sell signals as well. Bullish percent SPX, sorry about that. That also went on a sell signal a couple of weeks ago. So when one indicator goes on a sell signal, I like to see others follow. So if one goes on a sell signal early, it's not necessarily looking to short the market and or buy the market if it were to go on a buy signal, but it's just something to keep an eye on and watch the other indicators follow. And now we have confirmation from several indicators that the market is indeed moving lower. So just keep that in mind. New York Stock Exchange highs, new lows. We finally broke the zero line. Now, it's not necessarily you want to rush out and again, short the market, but this is where you want to see when you have weakness here. Take a look at August, September, October of last year. This is where we're going into, right? So, but look at where we are here, right? Now, if you see here, we stayed below the zero line all through October of last year. And this is what you want to see. Now, if the market does have weakness going into October, and we are in a seasonal time of weakness again, look what happens. See, it's the same concept, and if history repeats itself, look for this area here to happen in here. Okay, so just keep that in mind. Now we are here at bottoms, but this is even worse that we're at a top now, so we might get a little bit more weakness here. And really, if you really come to look at the chart, we're going into the seasonal time of weakness, so this is actually a high probability that this will take place again. Okay, but just keep that in mind. Now, let's watch this as well, and we'll get a good handle on what's to come. Here's the VIX. VIX popped up, stayed elevated up into this 20 and 50-day moving average. 50 and 200-day moving average. Apologize. And we do have positive, as you can see, divergence we had when the VIX was actually lower here. Now we're getting back into these areas. So again, maybe a pullback to here is why I say we get some strength for a couple of days. That's why the captive VIX for now, and then look for higher prices. Okay, now let's take a look at the dollar. And do I have a picture of the dollar here? I thought I did. Actually, I'll have to get the picture of dollar. Sorry about that. But dollar was actually capped around 81.50 as well. So we're looking for an 82.50 breakout to really confirm a move higher. If that does happen, you'll get further weakness in equities and look for metals to actually roll back down again as well. Now, speaking of the metals, and I want to show you. I want to show you this real quick. This is the XLP XLY ratio. Now, what this chart really says is that the consumer staples is really a defensive play, whereas the consumer discretionary, we have the consumer spending, luxury goods, luxury items, TVs, they're going shopping. So that's what you have. But when you have the markets starting to get a little fearful, people hold back their spending, and the first thing to go is discretionary stocks. And this is what you have here, right? So we have this May, April run of the XLY money coming out of consumer staples and into consumer discretionary. Just watch and see if this bottoms here. This is a good little ratio chart. We're starting to roll over while this is starting to turn back up again. So if we take out the 70-ish area here, this is what I'm looking for, and that'll give you another confirmation that the market is indeed starting to sell off again, and probably looking at another 3 to 4 or 5% correction from these levels. So let's just keep that in mind. Now let's take a look at gold. Speaking of gold, take a look at the weekly chart of gold. I do think here we're getting into our sell signal. Now, like I mentioned, I'm not a big fan of buying here, and that's why I'm letting this run up. I'd rather be a better short seller. I do think gold goes lower again. Now, keep in mind, though, we are seasonal time of strength for gold and crude oil. But crude's is its own animal. What's going on in the Middle East? But and I'll get to that in a moment. But I do like gold in these areas here for a possible short. Now, again, we needed to pause and we needed to reverse and we need to take out the previous day's low for a trigger. But right now, this is not. It's still. I think still has some good room to run. Take a look at the daily chart of gold. You'll see what I'm talking about. So right up in here, we're getting into this zone area where we don't want gold to sell off much further. Right. That is a daily chart. We did get our turnover finally on our ratio chart, so that is a good bullish. A good bullish sign. So I'm thinking right up in here, 38% retracement off the low, that hopefully this would cap and then we would actually sell off again. So let's keep an eye on gold this week. I'm thinking maybe gold has a little bit more upside, and then look to sell gold again on the way lower. Take a look at the USO, bullish percent. And this is why I said, you know what, yes, I do like the way gold is acting, crude oil is acting. And again, crude is usually seasonal time of strength going into October, and then usually crude starts to sell off again. But I like the fact that it's holding in up here. And I'll show that to you on the chart. But I want to show you the bullish percent ENER. The energy sector is actually on a sell signal. So I'm not looking to buy crude here. I'm looking to buy crude down at these areas here. And obviously here, if we can get back into the USO right around $35.5, $36 range. Right now, it's really in no man's land. I'm not looking to get into that. I'm looking for some sort of a pullback or a break in a back test. And here's the GLD. Now, we do have this inverted head and shoulders, measures 150. I'm not looking to say that it's going to go to 150, guys. But again, it is a inverted head and shoulders pattern. Nice logical area for at least a test of the 140, I would say, 138, 140. But then again, that's also a big stretch too. So let's just keep an eye on it. But again, if you are long, just tighten your stops. Bring your stops down to the 131 area here, below Friday's low, or half of the candle, body of the candle, or below the 50-day moving average. But again, we're still really in a downtrend. That's why I'm looking for more a better area to short than actually be long gold. Here is the USO, and I showed you yesterday that we on Thursday's morning call, that we are at this area here filling the gap. And if we do break higher, and the next back test would be the next higher low, then I would give that a shot and look to get long crude oil. But this is actually really holding in some strength. But remember, the bullish percent ENER is on a sell signal, so just keep that in mind. And here's the weekly chart of the S&P. And again, the weekly charts look fine. There's nothing wrong with the chart at all. It's actually still in a bullish configuration. We're still in an upward channel, making series of higher highs and higher lows. So the longer term picture remains intact, And if we look at the daily chart here, yes, the daily chart was succumbing to some selling pressure, but that's normal. The CCI actually just fell out of bed on Friday, and we're still holding that 50-day moving average. So we are testing the 50 coming off of this descending triangle. Now, I threw this out on Friday, and I also threw this out here. So what am I looking for? We got the measured move from the descending triangle of 156, 160-ish area. So we're in it now. I'd like to see, again, probably a test at a 1670, maybe 75-ish, maybe get back into the 23% zone in here, and then fail again. Take this pivot out, and then probably look for a 1624, which would be S3, or even a round lot number of like 1618, 1600. If we take out this area, if we take out the June 24th low, then I think that the market is actually looking for a deeper downside correction, and actually can reverse its bullish bias and actually start trending lower. So this is going to be a critical point here, this pivotal support area of 1560 in the S&P. And that's what you want to look for. That I don't even think you wanted to get it down there. Let's put it this way. We don't want to even get down that far. 1600, 1618 is really going to be that line in the sand, because if you start testing this area, that's going to be a deeper downside correction. And at 1600, I'm looking for some support to hold and then start to rally again, and possibly even going into the fall. Now, this correction could be choppy, moving lower, and that's going to be healthy. That's a good. But if you start getting some deeper, big bars, daily bars lower, a lot of volume, then that's something that you got to really watch out for. Here is the Spiders daily, again holding a 50-day moving average. As you can see, this is coming into some selling pressure, and we do have some volume here. So this is actually real selling going on. If we take this out, you got to look for 160, and then of course the June low, which would coincide nicely with the 200-day moving average. I don't think it's going to get that far. I really don't. Again, remember, we are in the end of the summer. A lot of traders, investors, and money managers are taking off the last couple of weeks of the summer, and that's what they usually do. So you're going to have extreme moves to the downside and or to the upside for that matter. So just keep that in mind. I would not be looking to adjust anything at the moment. But again, I'm looking for right up in these areas here, 160-ish area to hold, and then we'll go from there. We'll reevaluate it. But I do see some further downside in equities. Now, again, we're starting to pinch with the 30-minute Bollinger Band with the Spiders. Again, maybe a back test up into this area here from Thursday's high, Thursday's opening range. Catch that and then look for some further downside here in the Spiders. Now, interesting, the Dow Jones, which is the Diamonds ETF, we have two trend lines, and this is all coming off of the November 2012 lows. We have one that's been breached, as you can see here, and now we have another one that came up. We touched it 4 times, 1, 2, 3, and now we're testing it now. So if the Dow Jones takes this out, then I do think you're going to see some further weakness in the Dow, and probably look to test this other pivotal support area here, which would coincide nicely with the 200-day moving average, about 143. And the reason why I say it is the transports. Transports are extremely weak. We do have this sideways, the slanted slanted support, which coincides with the 50-day moving average. We did breach the November 2012 low from here, as you can see. So I think that if the leader is now breaking down, it's just going to be a matter of time before Dow Jones starts to break down its long-term trend line as well. And then you have the IWMs. IWMs really has been holding up better than all of them. And if you look here, if we get back here to the November 2012 lows, this is still holding in, and this is still intact. But if we start seeing the Russell start to break down, which is our secondary leader here, I think you're going to have at least a test here. And if we start to break this area, look for this pivotal low of the August 24th lows to be tested. And again, 200-day moving average will probably end up being right around here as well by the time, and if this price action does get down here. So just keep that in mind, guys. But as you can see here, we really have a line in the sand. We're testing key support areas, 50-day moving average and a long-term uptrend line. So you got to be real careful here. SMH, so we were looking at this pattern, and the semiconductor, which is the SOX, has a head and shoulders pattern. This has been breached. We do have a trigger. So now this pattern here head, left shoulder, right shoulder has been triggered, and now this is a live pattern here. So we do have a bearish pattern that is now working. So what do I like to do? I'm looking for the weakest semiconductor. So I go into an ETF, look at the ETF, and then take a look at the weakest stock in that ETF and look to short any green rallies or any kind of resistance areas. So that's what I'm going to be looking for. I'm also, if you are looking to just short the SMH, then you want to really look for a back test here first and see if it holds and then roll over. That'll really give you some real good confirmation, because sometimes when they break any type of support, they run lower and then they go back right back up again. So this is what I'm looking for in the coming days, and I'm going to be looking for the SMH. Also, the networking sector as well, also with Cisco, really been taking a hit, and you can look at the IGN, and that's the ETF for the networking sector, and there's a lot of good stocks in there as well. And that actually just made all-time highs this week. So that's a big shocker for the networking sector to start breaking down. And we'll just keep an eye on that one, because that does have a little bit more strength than the semiconductor sector. Here's Goldman Sachs. Again, 50-day moving average. As you can see, repetitive patterns. We're testing key support areas. So if we don't hold here in a lot of these stocks and a lot of these sectors, you're going to get a breach lower. And here's the XLF again. We're coming into some weakness here. So when you have the financials and the tech sector really not holding up, it's just a matter of time before the other sectors start breaking down with it. So XLF breaking down as well. And here's Apple. Apple holding in fantastic. And again, you got the icon pump here. I think you're going to be looking at right up in here about the 518 area. That's that gap area here, as you can see. We got that gap area resistance, which we're in now. So I think you're going to probably have a big push at a 518, and then we're going to need to reevaluate it. I think that you're going to see probably a push lower. Now again, that could change because Carl Icahn and you got George Soros now pumping the stock up. But look what happened here. We had big move up, and now we just have decrease in volume here. So we'll see what happens. But also, again, if you're long, tighten your stops up. I would just put it right on the Friday's low. If you want to give it a little bit more room, Thursday's low would be as well too. Not a bad spot. And then lastly is the Qs. But you see what's happening here. Apple can't sustain the Qs, even though Apple is heavily weighted. You have the technology sector really starting to break down. That is below the 20. It's still way above the 50. So it is holding in better than a lot of the other sectors that we've been watching. But just keep an eye on it, guys, okay? I do see some further weakness. Quick recap. I'd like to see a little bit of strength to sell into this week. And I would say look for lower prices again going into the end of the week and next week. Remember, the caveat here is going to be the FOMC. We're going to FOMC on Wednesday. That could actually change things either worse, or we could actually reverse and move higher again. So just keep an eye on that. Look out for your earnings calendar and your economic calendar so you can be prepared for the day. All right, guys, have a great day. I know it's a little bit long video, but I wanted to get a lot of key indicators out to you and so we can be better prepared for the week. Have a great day. We'll speak to you tomorrow. Take care.